4-for-1 stock split announced by Nvidia. Now it's a goodbye. Well, Nvidia stock reclaimed a key support level, adding to gains on a stock split announcement. With the earnings on deck, is Nvidia stock a goodbye now? Let's find out. Welcome to Buy or Die. My name is Bahor. Let's get started. The chipmaker announced in a press release Friday that it would initiate a 4-for-1 stock split. The company's board of directors has already approved the move, which Nvidia says will make its shares more accessible to investors and employees. The split will come in the form of a stock dividend, distributing 3 additional shares of a common stock for every share investors own, as of close of business on June 21st. It's important to note that a stock split doesn't change the fundamental value of the underlying business. Stock splits merely divide up the company into more ownership segments. In the case of Nvidia, instead of owning one share worth $600, shareholders will have 4 shares worth $150 each. On February 24th, Nvidia easily beat views for the fourth quarter. Year over year, Nvidia earnings rose 64% while sales climbed 61%. In quarter 4, gaming chip revenue rose 67% despite supply shortages. Data center chip sales soared 97% due in part to the Mellanox purchase last year. The quarter kept a breakout year for Nvidia's computing platforms, said CEO Jensen Huang. In addition, Nvidia guided revenue higher for the current first quarter. Analysts expect EPC to rise 36% in fiscal 2022 as revenue jumps 35%. This despite Nvidia, like other fabless chipmakers, facing supply constraints at chip foundries, namely Taiwan Semiconductor. In case of broad semiconductor weakness, some experts advise investing in the highest growth end markets. Nvidia taps those markets, including artificial intelligence, self-driving cars, data centers, gaming, and cryptocurrencies. In fiscal 2021, Nvidia earnings staged a strong comeback after falling the prior year. The pandemic fueled demand for Nvidia chips in home computing, video games, and data centers. Now chips are in such hot demand that it's led to a global shortage. Management expects tight supplies of Nvidia's latest gaming GPUs to last throughout its fiscal first quarter, meaning it will be at least May before the situation improves. In early May, the chip stock triggered a sell signal from a 615 buy point, falling more than 7% below the entry. The relative strength line for NVDA stock has been choppy and is back where it was in early February. A rising RS line means that a stock is outperforming the S&P 500 index. Nvidia stock owns an RS rating of 56, meaning it has outperformed 56% of all stocks over the past year. On a fundamental level, Nvidia earnings and sales are rising again after sharp declines. The chipmaker shows healthy profit margins and return on equity. Recent acquisitions expand its opportunity in emerging growth areas such as data centers and cloud gaming. New gaming chips underscore its continued dominance in core markets. The adoption of cryptocurrencies could further stoke demand for Nvidia chips. Nvidia is a leader in a fabless chip group, but amid the global chip shortage, it could take months for the supply of Nvidia GPUs to catch up with demand. Many people say Nvidia stock is not a buy right now as it's not in a buy zone. But this news about upcoming split changed many things. You know, split is always surrounded with hype, and we know where the hype is, the money is also there. Many people will rush to buy Nvidia stock next week because of split, and if you become one of them, you can earn about 5% profit, in my opinion. I'm going to watch Nvidia stock on Monday and perhaps I'll buy a few shares to speculate. If you are a long-term investor, you can undoubtedly buy this stock because it's going to rocket when the chip shortage will be resolved. Well, I hope it was useful information for you. Subscribe to my channel to watch my videos every day and see you tomorrow. Bye.